Hey there, folks. Today I'm diving into the deep end of the financial pool. It's been a rough ride in the global stock markets, and there's a lot to unpack. Let's start with the big picture. Global stock markets took a nosedive recently, and it's got everyone on edge. The trigger? Concerns about a potential economic slowdown in the United States. The July jobs report didn't help. It showed weaker than expected job growth and an uptick in the unemployment rate. This has sparked fears of a looming recession. Now let's talk about Warren Buffett. When Berkshire Hathaway, yes, Buffett's company, reduced its stake in Apple, it sent shockwaves through the market. This move was seen as a cautious stance from one of the world's most renowned investors. And when Buffett gets cautious, everyone else does too. Especially in the tech sector, which has been the market's darling this year. Japan is also feeling the heat. The Nikkei index just experienced its most significant drop in history. This is a stark reminder of how interconnected global markets are. Investors are keeping a close eye on central bank policies worldwide, especially in the United States. What the Federal Reserve does next could have massive global implications. Speaking of reactions, the stock market didn't take this news lightly. The Dow Jones Industrial Average plummeted over 1,000 points, marking its most significant daily loss since 2022. The S&P 500 and Nasdaq also took substantial hits. It was a broad-based sell-off, affecting various sectors. Market analysts are split on this one. Some say the market is overreacting to the recent economic data. They believe the U.S. economy is still relatively strong and urge investors to avoid panic selling. They even suggest that the current volatility might present some buying opportunities. On the flip side, others are concerned about how the Federal Reserve is handling interest rates. Some argue that the Fed has been too slow to react to signs of a slowing economy. They believe more aggressive rate cuts might be necessary to stave off a deeper recession. The Federal Reserve's role here is crucial. After maintaining a hawkish stance for a long time, the Fed is now under pressure to cut rates more aggressively to stimulate economic growth. Investors are watching closely for any signals from the Fed about future monetary policy. Some economists are even calling for an emergency rate cut. The challenge for the Fed lies in balancing the need to control inflation with the risks of slowing the economy too much. Their actions in the coming months will be pivotal in determining the U.S. economy's trajectory and its impact on global markets. So there you have it, a snapshot of the current market meltdown and what's driving it. As always, stay informed, stay cautious, and we'll keep you updated. Thanks for tuning in, and don't forget to like, share, and subscribe for more updates. Stay savvy, folks.